Hello, everyone. This episode is to answer a question about a recent TD price drop. So first, let's look at the TD, the price chart. Actually, today is a good day. The TD price is up almost 5%. But yesterday, the price dropped almost 12%, down to $57. I think the closing price is $57. And what happened yesterday is the oil price suddenly dropped almost 28%. So people, of course, the market panic about what will happen to the financial company. Let's go back to 2015 and 2016 because in 2015, at one time the oil price dropped down to I think it's $25, around $25, and the price was low, even lower, maybe more than 25% lower than today's oil price. If you look at the TD earning per share in 2015 and 2016, it is about 8% growth in 2015 and 6% growth in 2016. So even at that time, the oil price actually was much lower than today's oil price. It didn't really cause a big problem for TD and even for other Canadian banks. Last night, one friend mentioned in TD overall, the lending portfolio, only less than 1% is for the energy sector. So it's really a small business for them. So even in the worst case, it should not cause too much problem for TD Bank. But of course, even before yesterday, the price already dropped a lot. In 1 month, the price dropped from $75 down to maybe $65. And this is because two reasons. The first is in the latest quarterly report, TD Bank missed expectation. They only grossed the profit by 4% compared to last year. They increased the dividend by 7%, which is also lower compared to the average 10-11%. The reason for that is they have some challenge in states. They have one business sector, the stock trading service business in states had some challenge because somehow in states the service is free. It becomes free now. So you buy or sell a stock for free. The service is free. It used to be like maybe $5 per transaction, but now it's completely free. And this really impacted their revenue and profit a little bit. So, but I think if you only look at the quarterly report, maybe the stock price is could be down like 1 or 2%. That makes sense, right? Because you missed the expected, maybe let's say 2 or 3%. But after that, then the coronavirus, people started to worry about the coronavirus. This is really something new, and nobody can tell you what will happen and how bad it will damage our the economy, impact all the business. But we also can compare to what happened in 2008. In 2008, the big recession. This is the global-wide recession, especially hit the financial sector. But in that year, 2008, the earning per share was down 15%, and next year, 2009, it was up 10%. So in the worst case, let's say the coronavirus will really impact all the overall the business, like it caused a lot of damage and the earning per share down like 15%. Then the stock price is already down more than 15%. Yes, at today's price, $60. It's from $75 right now. So it's already down more than 15%. So even in what the case, even it's same as the damage, same as what happened in 2008. It's already priced in. So I don't think at this price it can go too much lower from this price. But personally, I don't think the coronavirus will cause such big, impact on the business and on the TD stock price. Because the coronavirus is a one-time event, like one-time issue, right? Mostly it will last maybe 2 or 3 months, and in summer, maybe everything is gone. So TD just released the quarterly report last month. Next time will be in May. So most likely we should know what's the damage from the caused by the coronavirus. At that time, maybe we can think about again about the damage and the price compared to the price, see if it makes sense. Which I think right now it's really a very low valuation. It's a very attractive valuation right now. So I would say from the business perspective, there's nothing wrong with the TD business model, and also nothing wrong with their operating, the business operating performance. Yeah, they have challenging states, which you always have challenge when you run a business, right? But if you look at what happened in the past, every time there's a sudden, the big price drop, normally it only lasts like 1 or 2 months. Okay? Last time was 2000, it was 2018, right? I think it's 2018. As you can see in 2018, so the price was down from $80 down to 66. That's because of the China and the U.S. The trading negotiation problem. Then in the next 2 months, the price recovered back to $66. So I would think this price maybe it takes 1 or 2 weeks will recover back to maybe $65 level, and after that it depends on how the coronavirus things impact the real business world. It may take another 2 or 3 months to fully recover back to a normal valuation level, which I believe should be between $71 to $75. It's a reasonable valuation for TD Bank based on today's business performance, based on the last quarter the performance report. So let's say if you already hold TD Bank stocks, my suggestion is just hold it, because nothing bad has happened to the business. It's all about worries. It's about what may or may not happen in the future. And let's say even the coronavirus really caused a lot of trouble for the businesses in Canada, but this is only a temporary, maybe just 1 quarter, not even 2 quarters, maybe just 1 quarter. And Also, you should keep in mind, like when it happened in China, people had no idea what is it. This is because this is a new virus, right? People have absolutely no clue. But now at least we know it's a new coronavirus and what people should do to protect themselves, how the government should organize the society, make sure to minimize the damage, the impact. So I don't think this will cause a huge, like a total like shutdown for the city, for the country. I don't expect that, but of course, nobody knows. Nobody knows. But no matter what happened, this is only a temporary thing, and maybe 1 quarter, maybe 2 quarter, and everything will back to normal. So if you already hold the TD Bank stocks, just hold it. If you have a plan to invest like maybe $1,000 per month or per quarter, keep doing it and don't stop it because from history, every time when you have a big market pullback, it's always good to keep buying. Yeah, it's always a good time to buy. Uh, Lastly, I would like to recommend two channels on the YouTube channels for you because I know you want an English channel, and normally I only create an episode for Chinese guys. So this is one channel I would like to recommend to you. It's the name is Invest with Sven Carlin. He's a professor in I think in Europe, but he talked about a lot of investment concept for beginners, which I think is really good for you to help you understand the investment, the stock market, a lot of good stuff there. Another channel I would like to recommend to you is the Plain Bagel. This is a young guy in Ottawa, and he's a professional financial advisor. He also talk about the basic concepts about stock market, about stock investing and portfolio, etc. And because he's located in Canada, in Ottawa, I think maybe the way he talks about, maybe it's easy for you to understand it because he's focused on the Canadian market, and also his focus for the content is focused on the beginner level. I will put the two links below so you can check it, and I hope this will help you understand understand the stock market better, so you can make a good investment decision in the future.